Good morning, Steve Reed in Chicago with the morning grain comments. Hope everybody had a safe and nice weekend. This week, we might categorize as a super week in which on Sunday we have the Super Bowl game. But also, it's a weather week in that beans are sharply higher overnight. And because of that is the fact that we're seeing dry conditions again in Paraguay, southern Brazil, and most of Argentina. Temperatures are also going to start warming up. On top of that, we have too much rains across northern, central, and eastern Brazil, which is slowing the harvest of the beans there. I think most of the trade is looking for USDA to drop South American corn crop 4 million tons and maybe beans 10 million tons. The problem is that you have some people thinking that the beans could be down as much as 30 and corn 15. So that should shift demand back to the United States for both corn and bean exports. We'll also be watching the tension in Russia and Ukraine. Some people still think Russia could invade Ukraine post-Olympics, and that there's some dire forecasts of how long Ukraine can stop a Russian invasion and what that might do to the the Black Sea corn, wheat, and also sun oil exports that we normally are expecting this time of year from the Ukraine and wheat from Russia. The Chinese and Russia did sign a pact which suggests that Russia could send wheat to China, but their stocks are also relatively low. As far as U.S. weather is concerned, the Drought Monitor Index kind of moved over a bigger area of the southern plains, including Texas, Oklahoma, and southwest Kansas. This is somewhat of a time in which patterns could change in the southern plains, maybe for a week. But after that, we go back into a warm, dry pattern. And right now, the weather forecasters expect March to be warm and dry across the southern plains. That should put a premium on Kansas City wheat versus Chicago, and try to widen the gap between wheat and corn. That spread is pretty narrow right now, historically. We'll also be watching the USDA report this week and see if they make big changes in the corn and soybean supply and demand by lowering it and giving some of this managed money some kind of reason to add to their long positions. And again, managed futures are close to a record long in the grains, and the index futures are also close to a record long. Index are long only, and they hedge against inflation. We're still outside markets trying to struggle with the prospects of the Fed raising interest rates versus signs that the economy is growing, especially with the jobs data on Friday. So we'll see what inflation and what some of the supply chain challenges and what weather has impact on prices. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.